We're live. Turn it up. Clicking close. Feel the rush. Every shot, every frame, we stand. Welcome to the show. It's in your hands.
Hey, good afternoon, everyone. Today is January 27th, 2026. This is Brent with Enlightened Trades, and today we're going to talk about General Mills. We're very close to a buy alert, and we'll cover that today. Also, just quickly cover the overall market and see where we're going, what I think where we're what's happening right now, and just some quick thoughts on all that. So let's jump into it. Just like always, so this is General Mills. GIS is the ticker symbol. And I go back. Well, first thing I usually do is I'll pick the high of the last year, and we'll pull a fib, a standard deviation fib from the high to the closest swing low. And this is the closest I could get. Swing here, there's a swing low here. So then I go, we'll see where the 2 to 2.5 goes, and then the 4 spot to the 5 spot. Okay. So typically we'd see get down to the 2 to 2.5, which we did, have a retracement, and then from there we'd go to the 4 to 5 spot. After we've reached the 2 to 2.5 spot, then we'll take the next high, go to the next swing low, which is here, and we shall see, the 2 to 2.5, which works out perfect because it also matches with the previous 4 to 5 spot. So a lot of times these standard deviations, they they confirm each other. Okay, so that's why we're doing General Mills today. I like this chart. I think we're at a good spot that we're going to start going up. So let's review what's happened. I went and have already marked out each quarter from October, the fourth quarter, essentially in October of 2023, and I went and marked each quarter out until today. And then for each quarter, I went and marked the high and the low. So now that we have that, we will review each quarter, see where it's been, where I think it's going to go. Okay. So October 2023, we had a low, and then we had a high. Okay. Next quarter, we came down, we made a low. We didn't take out the previous low. So there's some liquidity here. Then what do? We go up and take this high. We make a new high, took out this high. So we're going to delete this high now, so we don't need it. Next quarter we make a high for that quarter, but we leave that high in, and we come down and we make this low. Kind of crazy. So we're gonna expand this a little bit. So we make this low. So we still have these two lows. Correct that a little bit. And then start a new quarter and make this low. So now we have all of this liquidity. 4 quarters in a row, we have not taken a low. And what do? We go up and we take out the previous 2 highs. We make this high. So we can now take out these 2 highs. This was the high that I made for the previous year, and this is where we pulled the fib from. So that high is there. Then the next quarter we made this high, and as you can see, it's the first day of the quarter made a high, and then we come down, we make that low right there. So we still did not in this quarter. Look at this. There's 5 quarters of lows here that we did not take. It's kind of crazy. Then we start the new quarter, and then what do? Then we take out all of these lows. So now we can delete all of these lows here. is the liquidity now has been taken. Okay. Make a new high. Make a new high. The next quarter, make a new high. So here's that low. Make the next quarter, we make a high. Come down, we take out this low. And we make this low for this quarter. Okay. Quarter 2. Quarter 3, we make a high. Come out, take out that low. Make this low. For quarter 3, make a high for quarter 4, and then we come down, take out this low. And in quarter 4, we made this low, and then quarter 1, we took out that low. So we have still now all of this liquidity. When we're going to take it, I don't know the timing, but this is since we've hit the 4 spot to the 5 spot and the 2 spot to the 2.5 spot, I think that we're in a very good place to start considering a buy. Now, typically, I will wait for a close above the 20. Okay, we still haven't got it, so I will wait for close above the 20. I typically will like to see the 20 moving average more of a straight line, or even pointing up just a tiny bit. But we're making a bottom essentially right here. So you can consider when to buy. Typically, I will wait for a close above the 20. But I think this is a good spot either way. This is a bottom. Now, this is a deal. This is going to be a crazy week, possibly, right? We have the Fed coming out tomorrow, and we'll see what they say and how it's going to affect the market. In the broad market, let's go to the SPX. We had a brand new high on the SPX. So on the SPX, today we created a brand new high. And this is the all-time high now on the SPX. If we go to the NASDAQ, we had a high in the previous quarter. Okay. Although we did take out internal liquidity here, we did take out the previous high in this quarter, which would have been starting in January here. So now we took out the internal liquidity. It's a crazy day. The SPX is up 36 points, NASDAQ 248, but the Dow Jones is down 415. So a little crazy day, which might signify a topping formation here. This, where we have 2 large green days on the SPX, NDX, NASDAQ, and the Dow Jones, we have a down day. This could be the sign that we have reached the top. We shall see. Now, even when we reach this top, we should see some, back and forth. We're close to making this a double top here. And the Dow Jones, I think we're done with the Dow Jones. So we might see some down action. The other reason I really like, or one of the main reasons I really like General Mills, is it's a defensive stock. So once we start seeing the SPX, if we start seeing the SPX start falling off here, then a lot of the stocks I've been covering lately, we should see start going up significantly, because they're defensive stocks, right? General Mills, everybody loves cereal, food, and just the staples of the market. we'll start seeing a lot of money start moving out of the technologies and start moving into the defensive stocks. So that's one of the reasons that I really like General Mills. It's a defensive stock. Again, I typically will wait for a close above, and but we'll should see some action over the next few days. But it's going to build a. It might take a little while to build a bottom. We'll see. Once money starts leaving the SPX, and we start seeing some kind of significant downturn, then we will start seeing a lot of money enter into these defensive stocks. Okay. That's the market. Silver, we are at all-time highs in silver. We are show you weekly here. Yeah, so on a weekly, we've been, oversold on a weekly. Let's go to the monthly. Oh man, I mean on the monthly, the last time this happened is 1980, which we had this in 1980, right? So on the monthly RSI, we are way oversold. So just be careful. I do think we'll have a pullback, and the first pullback would be here in the 75 range, and just get rid of some of this. And then the possible next pullback if we get to this low, which I don't think we will, but we could get a pullback definitely to the 75 range. I personally also think that silver is not done. I think we'll go up to 200 plus, but this is not a healthy. This is not healthy. You would like to see it come down, and on the weekly, this is okay. Sorry, I think it's over bought. I'm gonna come down into this weekly order block here. So anywhere from 70 to 78. But I do believe that price will come down there. If you do have silver, which I have, I actually have physical silver. And so one of the things that I do is um, if this is not to hold on long term, but if you have a lot of silver, then I would, it might be a good idea. It's pretty cheap. This just to protect. It's like a hedge against if you have a bunch of silver. Just by even a small amount of the Pro Shells Ultra Short Silver. If we do have a correction in silver down to the 75, then you'll see a pretty good spike here, and that could help you protect some of your silver holdings. Again, this is not a product that you should buy and hold. This is strictly a hedge. And I don't have the volumes on here, but if you looked at the silver volume and the Pro Shells Ultra Short Silver volume, that it's gigantic. So again, not recommended to buy and hold. It's just a hedge to protect your silver holdings if you have some. Okay. I am not planning on getting rid of my silver because it's physical silver, and so my silver holdings are really meant for. I don't really see it as an investment, although I do like to protect my investment. I see it more as like if we did have some kind of currency crisis or some kind of crisis, it's kind of like doomsday kind of stuff. I do hold some silver just in case if that's the only thing that has value to buy anything, that's why I keep it. So it's really not, I don't use it as an investment. Anytime I buy things, like General Mills, I will, I have an exit plan, which, sorry, we could cover that really quick. So if this is indeed the bottom, go here. So we should look at taking out all of this liquidity, Q4, Q3, and Q2. We could shoot for the 62, and then there might be some kind of retracement before it comes up, takes out the rest of this. So we'll just have to see. But when you get into profits, if it takes out this, you got in at 45, and if it takes out 54, you're happy with it, get out. Don't wait for me. Okay. Thanks everybody for watching. If you have any questions, shoot me an email or comment on this video. Go ahead and subscribe. And I'm trying to get better and do better at this. And sure appreciate everybody. Love you guys. Have a wonderful day. Bye.
This is enlightened trade.